good morning, and welcome to our weekly market outlook. It's Monday, June 8th, at the beginning of the 24th week of 2024. We'll be with you to see what's going on in the financial market and what we're expecting for the week ahead, even though, just like we know, that the market didn't start with such a good news and updates. Uh, at the very first trading hours, when just like Asia, even before the trading hours start in Asia, we had to launch missile launching from Iran to Israel. Well, because the Israel and they were attacking to the Hamas in Lebanon, Iranian government started to supporting them. The things that the same shit that happened just like continued by the Houthis in Yemen. The Yemen is also they started to supporting the somehow the Hezbollah, while they know the Hezbollah is going to be gone soon. Thanks God, finally, and we know that that's finally we can that we are so somehow to close that they lost many of their leaders and their soldiers, and now they are in a very weak position. And so the Iranian they started to supporting the Iranian government, Islamic Republic, Islamic regime based in Iran. Actually, we can say better that because they are not Iranian. Uh, in support of Hezbollah, they attacked to the north part, mostly the center of the north part of the Israel, and then the Houthis they attacked. Then Donald Trump said that I talked with the BB and Baby Netanyahu, and I said him not to respond like so big. That's why probably because of that the Israelis attack also to some part of middle, just like the central and western part of Iran. And we don't know exactly what's happened and what was this reaction and what was the result of the reaction, what was exactly the goal of that. But still, the situation is very complicated and it's very unfortunate. That's why we can see here, just as you can see here, US 10-year bond yields increased to 4.57. That's so high, 4.57. Don't just like imagine it was 4.43 just on last Thursday. Again, the Japanese 10 years also again 2.70. That shows that the how premium risk is so high. And as a reaction, the oil price is up by 3.45% for WTI, trading around $94, while the Brent also with 3.6% up, trading around $97. The same reaction we can see for the US dollar index increasing. That's why we can see the gold under pressure around $4,330, while the silver trading around $67. And the cryptocurrencies that they were somehow positive after just like falling down under 60,000 with this news, I don't think that their recovery also can continue and they can be under pressure as well. Bitcoin is trading right now at around 63,165, while the Ethereum is trading around 1,680. In the stock market, while last week on Friday, Dow Jones lost 1.35%, S&P 500 2.64, Nasdaq 4.2%, and a small cap 3 point almost 5%. In the future market earlier today, we could see the reaction for the Dow Jones still continues with more than 0.1% down fall, but S&P 500, Nasdaq, and small cap, they're somehow slightly getting recovered after sharp fall of Friday, but still they can be under pressure later today with ongoing geopolitical tensions. In Asia, Japanese Nikkei losing by 3.5% and Kospi in South Korea 4.7%. The same negative reaction all across the Asia. You could see with the ASX 200 in Australia losing by 0.7%, Nifty in India 0.2%, Hong Seng in Hong Kong 1.34%, and FTSE 15 China 0.6%. All across the Asia, the markets are negative. And the main reason is because of geopolitical tensions in one hand and economic data that we had so far last week on the other hand. Last week, talking about the last week, I have to mention that several important data we had last week. Last week it started with the Monday's PMI numbers. The most important numbers, let me go by the events based instead of the kind of the data instead of the date base or the database. PMI numbers we had last week: manufacturing PMIs on Monday, and then service PMIs on Wednesday. together they showed that the general economic activity is very weak in the Eurozone. They are falling again under 50 expansions area, very low number, even though in some parts they were better than expected, but very compared with the previous month, they are so low. Economic activity is under pressure in the Eurozone. In China and United States, somehow they were better than expected, that's like somehow they were better than expected. Still, they are above 50 expansions area. On the other hand, inflation numbers in the Eurozone showed that inflation in the Eurozone increased by 3.3%, 3.2% for the headline, and core inflation increased by 2.5%. This shows that the economy can be still more under pressure with the high prices, as we saw on Friday that the GDP numbers also showing that that Eurozone GDP in the first quarter especially it fell by 0.2% in the first quarterly basis, even just like in annually also increased by 0.3% only. It shows that the European economy is very weak and under pressure while the prices are increasing. That tells us that the situation for the central bank meeting later this week can be very tricky. If they decide to hike the rates, which is expected, this economy can be fall sharper. And if they don't do this economy, these prices can go further. Interest rates in India, the Central Reserve Bank of India held the rates at 5.25%. And finally, US labor market data showed us amazing numbers. Average the non-farm payroll increased by 172,000, twice more than expected. Even the private sector created more than 120,000 newly created job we had in the private sector. Unemployment rate stayed unchanged at 4.3%, while U6 unemployment rate slightly eased from 8.2% to 8.1%. In Canada also we had a good numbers in labor market, 6.9% eased to 6.3% for the unemployment rate, and we had 87,800,000 newly created job in May. This shows that the Canadian labor market is not so bad. Generally, we had positive numbers last week. They showed that the US economy is still fine. For the week ahead, the market will focus on the three central banks meeting in Europe, Canada, and also in Turkey, while inflation numbers from the most economies going to be published today. Later, we are not going to have much important data, but we will have tomorrow the trade data from China and United States will be very important to watch. We're going to have import and export numbers. We are expecting to see the positive numbers for both US and China, especially for the China imports expected to increase by 25%. That's good. Actually good news for the China, because the Chinese biggest problem, if you remember, we were always telling that the Chinese biggest issue right now is not the tariffs, it's because of Chinese domestic demand. And this domestic demand, if the imports increase by 25%, shows that the domestic demand increasing, which is positive news for the China. For Chinese Wednesday, inflation numbers also will be very important. This war somehow helped the China to kind of get rid of those negative numbers in the inflation that they had. CPI expected to increase by 0.3% again monthly base. Annually, it can increase to 1.3%. And producer price index, PPI, which just several months ago, it was minus 2.4, falling by 2.4%, 2.5%, expected to increase by 3.8%. That's very good number for them. And in Turkey's retail sales expected to increase by around 21% again, but since the inflation is more than 32%, that means that retail sales in Turkey, real retail sales is negative. On Wednesday, don't forget, I forget to say on Wednesday we're gonna have later on Wednesday, we're going to have the BOC meeting. But before the BOC meeting, Bank of Canada meeting, we will have the inflation numbers from United States, where we're expecting to see CPI and core CPI on the monthly base 3 and 5%, 0.3 and 0.5% to grow, respectively, while the headline CPI expected to increase to 4.2%. and core to 2 increase to 2.9%. That shows that with the strong labor market that we have already, last week we had numbers, with these high inflation numbers, we don't expect to see any rates cut to this year. And even though, on the other hand, the market now expecting one rate high, the market doesn't expect any rate cuts, but now we don't give any chance for the rate cut, but the market that already they are counting on one rate hike later this year by 0.25%. In Canada, this week on Wednesday, we're expecting to see Bank of Canada to hold the rates at 2.25%. Inflation is not so bad in Canada, while the labor market showed the number are expected, positive. So Bank of Canada doesn't have any reason for now to change the policies, while on Thursday, the Central Bank of Europe, ECB, expected to increase the rates by 2.25% as inflation is rapidly increasing, and they have to do something, even though the economic growth is very weak in the Eurozone, and that can be the very tricky decision for the European Central Bank, and that can put the European economy very much more under pressure. On Wednesday, we're gonna have the producer price index in United States as well. That's one of the most important numbers to watch. If we see the producer price index PPI in much higher levels, it means that for sure we have to count on 25 basis point rate hike later this year. And on Friday, sorry, we're going to have too much economic data, especially inflation numbers from European economies, not Eurozone, but European economies separately, the Germany, French, Spain, and others, especially in Germany, which we are expecting to see the inflation to stay at 2.6%, very high for them, while the retail sales is negative somehow. But the market will focus on British numbers, where we're expecting to see the manufacturing sector, manufacturing GDP numbers, and the manufacturing production, industrial production, and GDP numbers for the April and 2 months ending by April. We are expecting generally from the industrial production, trade balance, manufacturing, investment, and all these numbers that they're supposed to be published. I don't expect any positive numbers there, and I'm pretty sure somehow I cannot say the pretty sure. I expect mostly that the economic data on Friday for British economy would be negative. With this situation and numbers that we're expecting to see again, and with the ongoing geopolitical tensions that right now we have, I don't think that we're going to have anything positive here. While we now, as mentioned, the VIX, again, as you can see here in the chart, is increasing. That's increasing in the VIX, holding the US dollar index above 100 level, and that's why the gold and silver, they were both under pressure, 4,300 for the gold and $67 for the silver. They are still under pressure. While in the stock market, despite technical recovery after sharp fall on the Friday's trading hours, still the market is not positive. Even as mentioned, that we have some technical recovery, but the market is not positive. Oil prices increasing, but if they don't continue, and the Donald Trump can somehow manage the situation, so probably we can see the oil price to slightly slow down, and the markets to have a positive reaction. It's dependent on the geopolitical tensions. On the other hand, the gas price is around $3, while the cryptocurrencies that they were recovering after Friday's sharp fall still, just like in the bigger picture, they are still negative, and we don't see any positive reaction after just like technical recovery date. We don't see any positive signal that they can increase further. That's generally what's happening in the market and what's going on. Hope it was useful. Talk to you soon. Goodbye.